Hello, everybody. Thank you all for coming. Not feeling 100% today, so I'm going to actually just leave my camera off, focus on the slides, so you can just get that. So you don't have to look at me. Anyway, thank you all for coming, and let's go. This is something I've been peppered with questions all week. Every day I say, oh, the flows are huge, and the money's this, and my I multiplier is this, and everything else, but the price is not going up, and people are frustrated, especially after 19 record days. We'll break that down. So let's go. This video is going to be called, let me see, is BlackRock manipulating the ETF market? And the topic of manipulation is, again, a huge subject of interest and debate within not only the hardcore maxi community, but other communities too. Obviously, BlackRock are the world's largest asset manager. They've made huge moves in the cryptocurrency space. I'll talk about some of those record-breaking moves too. And they have the ETF, which has made Bitcoin a bona fide asset. But this has led to discussions about the potential for market manipulation, especially given the tools they have at the fingertips, etc. We all know about JP Morgan's in the past and the stuff that they've done. But let's dig into this. And, well, this doesn't matter. And thank you to everybody on Patreon. First of all, before we jump in, Bitcoin is up a paltry 3.1% for the month of June, despite record-breaking flows. But we're only day 8 of June, so it's still early days yet. But let's talk about this first. This is from Vivek. And this is kind of stunning. It took gold ETFs 5 years to cross $15 billion in inflows. The new ETFs, in dollar terms, every single day, because I've analyzed it for the last 103 days, have taken in $33.6 billion. They took in over $4 billion in the last couple of days. It's just crazy. But anyway, there's also inflows and outflows and GBTC. This does not include GBTC, by the way. And that, of course, changes the calculus a little bit. Now, again, ETFs have taken in a ton of money in a very short window of time that took the gold ETFs a long time to get there, and that is hard for many to fathom. BlackRock hold over 304,000 Bitcoin as I speak to you now, which is a very big bag of Bitcoin. Considering there'll never be more than 14 or 15 million Bitcoin, that's a staggering amount. And there's tons of buying. So this is from a Geek Dead. Why did the price drop? Look up futures manipulation. This is how Wall Street works. You're welcome. BlackRock bought 2,440 Bitcoins, 450 your mind every day, and they staged a bullish front, then shorted their futures to profit from the fall. They're draining liquidity, funneling Bitcoin into their control. The ETFs you all so desperately want are the death of decentralization and of the dream. It's kind of what I mentioned before. It's kind of, when you read that, it's extremely poignant and sad. But I'll kind of be very fair and objective, as I always try to be. And again, this is just one person's point of view, but there's more. But some of the things that are highlighted are actually true, but maybe not entirely. So we'll break it down. This is from Pi Network Academy. Yesterday, same thing, 2,440 Bitcoin, 450 is mined, price went down. Textbook futures ETF manipulation. A lot of people are talking about the exact same thing. Tons and tons of people. Also, the game, how the game works. BlackRock Bitcoin ETF. Collect fiat trash from retail. Hold cash and manipulate the Bitcoin price with algos. Buy cheap, if any. And claim you purchased Bitcoin and never post it to your wallet address for verification. Moon Boys rejoice. And did I get that right? They said. So it is, a lot of people are very upset. And trust me, I hear it. I see it in the comments. And they're saying, what's going on? So then Frankie Makridis also has a question for Eric Balchunas. Frank smells something rotten. Can you please explain to me how we have had a record amounts of fund flows into Bitcoin ETFs and we are still range bound? It seems to me that BlackRock, Fidelity, and their market makers, JP Morgan, should show us exactly what they're doing with their funds. And they, Frank tagged sec.gov. Our friend Gary Gensler, yeah, he'll really be telling BlackRock and JP Morgan what to do. Anyway, Eric did respond, a very fair response. As I said before, and I'll say it again, the call is coming from inside the house homes. This is not ETFs doing, obviously, because They're buying like crazy lately. It's Bitcoin holders selling or leverage flushers or whatever. Time and again, ETFs go on a flowathons and it's met with selling from other holders. Now, I don't know from the data that I see. I don't see a lot of selling happening, but there is other stuff going on. So I'm going to try to pinpoint it. And I've done this before. I spent quite a bit of time explaining how market makers work. I'm not going to repeat that again today, but I'm going to explain all of the stuff that's happening, why there's so much money coming in, but the price is not going up. And this is a famous quote from Oscar Wilde. I may have said the same thing before, but my explanation, I'm sure, will always be different. So I'm taking a couple of different angles today with this explanation. Bear with me. I'll summarize it all at the end. We'll go on a little tour. We'll also show the new I multiplier of what 4 billion should actually replicate in terms of price. But first of all, let's talk about the OTC desks. This, zoom in here. If you look at the blue line at the bottom going up, that is the balance in the OTC desks. Per this chart from CryptoQuant, they have about 200,000 Bitcoin, which is a big, big bag. All right, Michael Saylor only has 240,000. So that's a lot, but that is spread all around the Krakens, the Coinbases, the Binances, and many other groups like River, etc. Also, cast your eye on the pink. That's the 30-day change of Bitcoin, and you can see they've been stacking, but this is up until the end of May. It doesn't include June. So the point is, if BlackRock want to fill their bags or whoever ETF wants to fill their bags, they can reach out to an OTC desk and they have the supply for now. We did get dangerously low on supply a while back, but now it looks like they've been replenished. In addition, we have, this is a big part of it, hedge funds are shorting Bitcoin like never before. And this ties into the futures manipulation that I spoke about at the beginning. CFTC, CME, Bitcoin leverage funds, net total combined new record short. The hedgies are shorting this thing like it's going out of fashion. And thank you, Vivek, for the chart. Also, whales are stacking like never before, but these are not the ETF whales. These are the 100 Bitcoin to 1,000 Bitcoin whales. So it's not the ETFs who is stacking here, but the question is, who is selling to these whales? That is kind of fascinating to see. We'll see on the next slide as well who could potentially be doing it. Now, this is kind of a liquidation map, heat map for Binance and Bitcoin. And you can see people still go leverage long on Bitcoin. And the whales manipulate them and they wick down. I talked about leverage long hunting yesterday and the day before, and that's what they do. And maybe this is how the whales are filling their bags here. They're just reaching in to those leverage longs and grabbing their Bitcoin. Real simple. There's other interesting stuff going on. Coinbase now is, for this is from Axel A. He says Coinbase accounts for 46% of all spot trading now. And the average trading volume has decreased from 25,000 Bitcoin per day to 9,700 Bitcoin per day. And in a bull market, this represents a lack of selling pressure, which is the yellow bars, which is just about to end, which can stimulate growth. And basically, simple code for this is the selling pressure that existed over the last 6 weeks or so may be done. Can't promise it, but may be done. Now, another trigger that maybe the rally will resume, again from Axel, the average bearish pressure reflected by the 30-day moving average net taker volume metric has weakened from 15 million over the last 30 days to about 1.8 million. That's a massive drop-off. And this was the greatest pressure in the last 2 years. And it might be the final trigger for the resumption of the Bitcoin bull market run. Again, a ton of money is coming in. Price is not going up. People are frustrated. The question is why? Now, I spent a lot of time analyzing these ETFs. I track every single flow across every single ETF every single day. And this is currently the 103 days of analysis of the T+1 price change. The first 90 days, there was 85% correlation between ETF flows and Bitcoin price. The last 16 days threw a rock in that, and that took it down to about 65% correlation. So you can see massive inflows going up, but the price is not going up. And that's reflected in the red line, which is the T+1 price change. So if you have $100 million coming in on a Thursday, we don't see the price change till the next day. And that's what this represents. So it does take account that lag. And over the last 14 days, we had $3 billion in inflow. $3 billion. And the price fell 3%. Over the last 19 days, we had $14 billion of inflows. But again, just focus on the last 14 days. The last 2 weeks, $3 billion in, and the price goes down 3%. And then I asked myself, okay, that's a big bag. I analyzed the $1.5 billion Tesla buy in 2021. That's how I came up with the IA multiplier of 21 on the nose. I'm going to apply that to this right now to see what we can come up with. Again, 19 days, record 19 days of inflows. But over the last 14 days, the price has actually fallen. So this is the multiplier for just the $3 billion of inflows and how it would work. Now, I have my 3 multipliers in here. I have the 21 from 2021. I've got the 56, which is my pre-halving multiplier. And I've got the 112. And you multiply that out with the $3 billion of inflow. The impact on the market cap is $63 billion. It's 21 times 3. And the impact on the price of Bitcoin, it should have. If $3 billion goes into the Bitcoin market, new cash, all right, that should increase the price by $4,200, which should have taken the price to $75,200 because the price was $71K 14 days ago. Very important. If we take the pre-halving multiplier, that should have taken the price to $82,200. And if we take the 112, the post-halving multiplier, it should take the price up $22,400 to $93,400. The question is, what happened? There's a mystery going on here because this amount of inflow should have raised the price instead of fell 3%. Something is very fishy. Thank you so much, Mr. Zhu. Now, I'm going to repeat this again because it's so important. Overall, just to give you a perspective of how big $4 billion is, the average DCA amount by a retail investor typically ranges between $10 and $100 a week. $50 is the average amount a retail investor DCAs into Bitcoin every week. $4 billion into these puppies in 19 days represents what 80 million retail investors would do. 80 million individuals. This is a monstrous flow. So you can see it's not 80 million people all buying Bitcoin over the last 19 days. It's institutions. It is pensions, it is et cetera, et cetera. So that's critical to know. Now here, before we get into my big conclusion, is BlackRock manipulating? First of all, there is that leverage long hunting, which I proved, and that's orchestrated by whales so they can fill their whale bags. Also, OTC desks now have the supply for now. Also, retail volume is diminishing, so they're not the ones selling, okay, and giving the Bitcoin to other players. Also, the net taker volume is tanked, which I've illustrated. The whales are stacking, so the retail aren't selling. The whales are stacking. Where is this coming from? Obviously, because of leverage long hunting, point number one. But also, the hedge funds. So I showed that at the very beginning. The massive, massive shorts that the hedge funds are putting. They're putting on what they call a carry trade, where they short the futures, which is just a reminder. Let me pull that up again so you can see. Bear with me. This one, record-breaking short Bitcoin. Hedge funds are shorting the hell out of Bitcoin as we speak. And as a result of that, they're doing the cash, or they're putting on the carry trade. So they're shorting the futures and they're longing the spot to make 15 to 30% APR per year. And this is chopping the head off the price appreciation for Bitcoin right now because of the pressure from the hedges. The same game has been played in commodity markets like gold for a long time, and it looks like it's probably happening here too. Again, the big picture, everybody thinks, oh, Bitcoin or BlackRock is manipulating Bitcoin. I don't think so. I think hedge funds, or maybe BlackRock's in cahoots with some hedge funds. I don't know. But the main concern is that BlackRock could use their substantial resources to influence price. And while there have been allegations of such activities, the concrete evidence is often lacking. I think it's a combo of these 6 points here, ladies and gentlemen. Okay, I'm going to do a little bit of Bitcoin news and then we'll look at the ETF flows, and that's a wrap. And, drop your questions below. I read all the comments. It's tricky. I know people are frustrated. It's like, we talk about all the money flowing in, but the price isn't going up. It's like, well, hopefully that explains it for the last time. Now, There are some problems, though. All is not well in Bitcoin land. Bitcoin fees are mooning again, going through the moon. It's up right now to very, very high fee amounts, the second highest ever since the ordinal spike a few months ago. And in other news too, Lightning Network. A lot of people talk about, Lightning is really doing well and everything else. But for those of you who care about centralization and decentralization, the Lightning Network is heavily centralized. Basically, Amazon and Google do half. So the Nakamoto coefficient, you could argue, is 2. If you could just control Amazon and Google, you can control the Lightning Network. So again, bear that in mind as well. Hopefully it becomes more dispersed over time. There'll be a Bitcoin-only playlist up here afterwards. Let's talk about the ETF flows and show you how significant they were and how we had a record-breaking 19 days of 4.2 billion, 4.1 billion, if I'm not mistaken. But day 103 is in the bag, 19 days positive. BlackRock is buying a ton of all of the action. It's represented here. BlackRock is the red line. Fidelity had a big day. Fidelity's biggest day 3 days ago was bigger than BlackRock's biggest day since day 40. However, BlackRock has a big permanent bid coming in, $150 to $400 million every day like clockwork, which is a truckload. 19 days positive in a row. Again, another record. The previous record before was 17 days. Now he smashed it by 2 more days. And again, $4 billion in 19 days, which is a crazy large amount of money. That's a visual of it. One huge day, but the other days are big. And what's also interesting is Grayscale has been dumping during this time too. And BlackRock had no problem gobbling up all of they had to release. And yesterday, 1,890 pulled from the system. Call that 4 times daily Bitcoin mining issuance. The miners are trying their best to hold. Actually, that could be a good point I forgot to mention here in this list. I told you I wasn't 100% today. Point number 7 could be the way the Bitcoin miners are dumping as much as they possibly can right now to buy new rigs. That could be part of the other selling pressure too that you don't really see, and that would explain why retail is not selling to the whales. Maybe the miners are, or the miners are giving all this stuff directly to the OTC desks. We will hopefully find out the answer to that one day. But again, nearly 2,000 Bitcoin pulled from the system yesterday after a monstrous nearly 13,000 only 4 days ago. Remember, Tuesday is always the best day for the ETFs, which I concluded a few weeks ago. And finally, Grayscale, 36.3 million to the negative yesterday. Thursday was 37.6, if I'm not mistaken. So they're still bleeding out below trend. So with that, everybody, thank you all for coming. Hope you hit the like. I'm here. It's not AI just yet, but better with my camera off. I hope you enjoy the show. I hope that explains what's going on with the so-called BlackRock ETF manipulation. It's hedge funds, it's whales, it's leverage longs, it's the carry trade. It's a combination of all this stuff. It could be miners selling as well, which I forgot to add at point number 7, but they are the reasons for it. I don't think BlackRock is doing stuff, but they may be, that whole T+1, T+2, they may be taking the fiat in. Bitcoin's at 71,000. They'll sit on the fiat for 24 or 48 hours, and then they'll wait to deploy at 69K. And then they can make $2,000 of Bitcoin pretty easily. So that's the conclusion, everybody. All in all, the amount of money that these puppies have brought into the space is huge. And a lot of people are frustrated. But over the last 103 days, trading days, Bitcoin went from 40,000 to nearly 70,000. So that wouldn't have happened without these ETFs. I just want that to be very clear too. Thank you all for coming. Have a great Saturday. Thank you to Sean Donnelly as well. And I'll see you all tomorrow for the Q&A. Hope I feel better. Bye-bye.